Good afternoon. Are you ready?
Good afternoon. How are you?
How are markets looking, Mir?
I would say a bit tentative. Decent news on the local economy, domestic economy, and some hope also for the second half. But the global headwinds still continue. So I would say it's a mixed bag.
Decide the script of how markets will move from here, let's settle year end. Will it be state elections? Will it be global macros? Will it be earnings?
I think elections will not be that much of an issue. Uh, the global situation and how the domestic demand pans out will be the keys to watch. Domestic demand was looking very good as we began the calendar year 2023, but over the last few weeks, the signals are getting a bit more mixed. So I would say, as far as domestic consumption is concerned, it's a bit of a question mark. Though I'm more optimistic for the second half. But as far as the spending and the infra-linked situation is concerned, manufacturing, I think that is still going very well, especially government spending happening in the railway space, domestic defense manufacturing, and the highway, etc. capex continuing from the government side, and little bit of green shoots, I would say, on the private capex side. So on the investment side, things are looking okay. Consumption is a little bit of a question mark, I would say.
Okay, so that's a fund flow situation. But Mihir, what's your reading of the earnings season so far? Financials was one space which was the consensus buy. Ahead of that, we have seen the numbers come in. What's your take whether financials will continue to lead the growth going forward or not?
Absolutely. So financials is the space where there is maximum visibility, I would say. At least for the next few quarters, we don't see any issues on the asset quality. We don't see issues on the margins front. So the only parameter I would watch is the credit growth and deposit growth, how it reacts with the liquidity situation panning out. But as of now, this looks like one of the most visible growth phases, and valuations are still attractive compared to pre-COVID levels. So financials is especially the banks and NBFCs are spaces that we are definitely positive on. A few months ago, we were more positive on banks because the tightening cycle was still on, but now we are towards the end of the tightening cycle, and now even NBFCs, which underperformed for a while because of the tightening, now even NBFCs are looking attractive. So both on banks and NBFCs, we are constructive.
One set of stocks which is really in focus has been the Adani group of stocks, and we've been mapping the kind of market cap change that they've seen in just the last two trading sessions. Friday midday, when you had that semi-clean chit handed over by the Supreme Court when they did make their observations so far public. So, by the way, the Adani Group stocks have changed over 1.1 trillion rupees in just the last two trading sessions. That's been the kind of trading activity that they've seen, and a significant rebound as well from their 2023 lows, which was around the budget time in February earlier this year. So Adani Enterprises has moved up about 127%. Adani Green Energy, 115% uptick coming in. For Adani Power, it's an 87% uptick. And even ACC has seen a 13% uptick come by. Adani Total Gas, 14% uptick. Transmission up 30%. Ambuja Cement as well has seen a 34% uptick. Wilmar with a 35% gain. Kunal, I don't know whether you're trading this cluster of stocks or not. Are you?
Well, yeah, but I think only two stocks out of the entire Adani group of names, Adani Ports and Ambuja Cements. That's the only two names which hold a lot of credibility in terms of charts. The patterns are more consistent. The volatility into these stocks is not as high and as random or inconsistent as compared to the other names. So that's the settling part for both of these names. In fact, Ambuja Cement, when the stock had hit that 315 mark in the end of January, start of the month of February, from there the stock has been consistently taking support at the rising trend line, and over the last 2-3 months there have been multiple attempts towards the break of the trend line, but every time the stock has retested those trend lines, it's actually led into a bounce. Today, rather on Friday, it was a very similar kind of a bounce for Ambuja Cement. So this comes as a very interesting chart pattern, and now that the support has been established at the 388, 390 mark, keeping that as a stop loss, positional traders could now look at along even at current levels.
Okay, let's take a very quick break. Of course, the Adani group of stocks are all holding a buzz. Adani Enterprises, by the way, is now up 18.5% on the futures. You've got Adani Ports as well, scaling higher by nearly about 7%. Balkrishna Industries, Muthoot Finance, and Dixon are the ones which are really a buzz within the liquid universe. We'll take a very quick break. We'll continue our discussion with our experts on the other side.
One stock which has amazed me is SBI. Numbers were super, and the stock has just not reacted. That's one stock which actually I'm surprised. Kunal, why is SBI just becoming this puffy duffy stock? It was the star of 2022, but it is the laggard of 23.
Yeah, so I think it's a phase for the stocks, and I think even today when I look at the sector composition, the activity and the trading activity, the price activity is much more inclined towards the IT, the metal stocks, and so there's a clear visible churn which is happening to the IT stocks as compared to the other sectors which were actually the leaders. So for example, the private sector banks today they are taking a bit of a backseat. Most of the large cap auto names are taking a bit of a backseat, and the activity is shifting towards the IT stocks. That generally is a phase of the sector, and generally on the expiry week we see these kind of settling phases where trading activity has to shift towards certain different sectors which could probably perform very well going forward in the next series. So my sense is that the position from traders is now getting tilted towards these IT stocks, and that's why you're seeing the PSU banking, the private sector stocks, they are actually taking a bit of a backseat because of some sort of profit booking. But this doesn't indicate that there's any kind of a change of trend for these stocks. It's a phase of the market where maybe for the next 1 or 2 weeks, these stocks would underperform as compared to the other peers.
I also just wanted to check what's happening to some of these manufacturing names. Case in point being Sirma SGS, which is up around 11%. You have Keynes Technology higher by 7%. Dixon Tech ahead of its earnings is up around 7%. Not the best day to compare it to the defense story because today defense stocks are down in trade. Cochin Shipyard down 10% on account of earnings, and Garden Reach are also reacting in tandem. But Mihir, your take as far as the entire manufacturing space is concerned, and especially the electronic manufacturing and chip makers or chip users, etc.
See, the direction is very clear. Government is open to more and more PLIs across sectors, and even in sectors where PLI is already there, extending and going ahead with larger allocations to the PLI. Not only that, there is clear direction of manufacturing defense products within India, domestic manufacturing and technology transfers. So I think all this put together does imply that we have a good runway for manufacturing revival in the country, led by these incentives. But we have seen in many cases, once a certain critical mass happens, then the ecosystem develops and you become competitive even without any subsidies or PLI kind of schemes. So I think mobile phone is one very clear area where we saw initial success, and now we have more and more backward integration into the mobile phone segments. We are going, probably to the chip level very soon in the next 4 to 5 years. So I think the manufacturing theme, whether it's electronics or any other sector like textiles, for example, then we have chemicals, pharmaceuticals, a lot of the spaces where government has identified either sectors or products where we need to be, self-reliant, not only from the economic point of view, but from the security point of view. So this is a theme, I think, which will, continue to be a performer for a while.
Naresh, want to come to you because it's an interesting mix of stocks out there within the liquid universe. Of course, there is the Adani group of names, but then you can't really pick up a pattern or a trend here. Any trades that you're identifying right now?
So overall, IT is a trade. That is where we are seeing a clear demarcation in terms of what happened with the mid-cap IT. We are seeing the same play out in the rest of the larger mid-cap IT names. So we are seeing a breakout happen in LTI, Mindtree, LTTS. There's a breakout in Nasdaq. And even the larger names, we've seen a good enough recovery in the last 2 sessions, indicating there is some more to go. So Infosys is the one which saw a sharp knock on results that could go back to 1350, 1400 levels. So that's a trade I'm watching out for. Then there is LTI Mindtree. In the Adani group, it's only Ambuja Cements, which I continue to like. The rest of the names are difficult to trade. So overall, IT as a pack is an interesting trade for the next few sessions, maybe 5 to 6 sessions.
Mir, what do you think will be the impact of this entire TCS of 20% on foreign travel?
I don't know. I mean, from the market point of view, I really don't see sectors or stocks which could get really impacted. It's of course a irritant and probably tones down the sentiment a bit, but I don't see any major impact, frankly.
Holdings, Bajaj Finance, some of these Bajaj stocks are doing extremely well. Nuresh, I'll be very repetitive, but I have to go back to Adani Enterprises, Adani Ports.
So if I were to purely look at it on a technical picture on Adani Enterprises, given away the volatility, after that big fall from 3,500, 4,000 levels, it had bounced back to 2220 the first time. The second time it bounced back to 2135. And today we are well above that 2200 mark. That's an indication generally that the market seems to have digested the whole fall. And now till the time we hold about 2200 levels, it can make a recovery back to 2800 levels, which was the last gap down, the second time it took a fall. So 2800, 3000 could also be possible, but it's a case where given the volatility, the risk rewards are not great. But you can look at an Ambuja Cements or a Adani Ports also, because that is very interesting for the fact that that stock has recovered much better and is making a fresh move. So if one wants to get into the space, a little less volatility comes in Adani Ports, Ambuja Cements or an ACC. But the first indication has come from the price action that we've crossed a 4-month high on Adani Enterprises as such, the main company.
Okay, here's the RBI governor then, Shaktikanta Das, while clearing the air on the 2,000 rupee note withdrawal, said that banks have been advised to make necessary changes and that the government will decide on extension of the exchange window post September 30th. Let's listen in.
So please see it as a part of the currency management operations of the Reserve Bank. Let me put it, clearly, and that is the primary purpose which we have followed. The banks have been advised. We have issued further circulars yesterday to the banks to make necessary arrangements, including arrangements to ensure that the people do not stand under the hot sun in this peak summer, to make arrangements for drinking water. Now we expect most of the notes to come back. That is our expectation at this stage. We will see how much notes come back. And as we approach 30th, we will decide, at that.
Okay, so that's about the 2,000 rupee note getting replaced. But remember, the exchange will start from tomorrow. But have the people started queuing up outside the jewelry stores as we had seen back in 2016? Let's go across to my colleague Anurag Shah. He's at the ground zero in the Zaveri Bazaar to get us this ground report.
Today is the third day after RBI's announcement of withdrawal of 2,000 rupees note, and we are at jewelry market Zaveri Bazaar, and as per the majority of jewelers, there is not much of impact after this decision, and this time the situation is altogether different from November 2016, that is demonetization. And as per jewelers, the rates have also not gone up, and jewelers are, the normal demand is coming. That is also due to the wedding season going on, and there are a couple of other reasons also. According to jewelers, they think that things will be same going ahead because there are 4 months given this time for the exchange of notes. So according to jewelers, that the 4 months time period is there. So even if people want to buy gold, so there is a 4-month window is available for them. So there is no hard rush to buy jewelry or gold this time after RBI's announcement of withdrawal of 2,000 rupees note.
At least 20% uptick has already been seen, and we anticipate more from today onwards till the 4 months window period. Nearly about 50% sales boost can be expected.
I think so. There will be no any surplus demand. It is just a government announcement is like that. It's feel better. My feeling is like that. It's better. People are cautious about that. How to do, what to do, how to play.
The people are not in the tension. They are smoothly, they are thinking what is to be done, and government has announced that every day 20,000 of the amount can be deposited in the gold. Today I saw State Bank of India also announced that you don't get 50,000 rupees. That also don't require a KYC. So that seems that there will be not much tension as far as what we have seen in last demonetization.
Okay, that's a flavor on gold. There isn't as much of a gold rush as was the case back in 2016. Kunal, are the charts though reading that or not?
Yeah, it's very similar. So not too much of a fervor for gold prices in rupee terms. The concern for gold prices actually is that the dollar gold prices are at a multi-week low, and even the silver prices. So even if we go into a bit of a rally because of this kind of a news or an event, but I think that would be very short-lived, and eventually it I think has to come back towards its mean, which should be below 60,000.
Okay, so that's a take coming in. Mihir, before we let you go, I wanted your word, if you can, on the capital good names and specifically on Siemens. What would you make of the 10% cut?
Sorry, I can't comment on specific stocks.
But overall for the sector, would you be a buyer for the capital goods majors, the MNCs?
Certainly, because we talked about the manufacturing theme, and most of the stocks are exposed to defense, power, railways, and of course the domestic capital goods manufacturing for various things that we are talking about. So, in general, as a portfolio, we are quite over it on the industrials and capital goods space.
Here on that note, we'll let you go. Appreciate you joining us on ET Now today. Time now to get the closing strategies from our technical experts. Nuresh, you go first. What's the closing trade?
So that would be LTI Mindtree. That's a stock which looks interesting for a bounce back. A breakout with the bounce back happening in the IT names. The rest of the mid cap IT names are broken out. So out there expecting a follow up move towards 5,300 to 5,500 mark in the short term.
Mindtree is the buy trade coming in from Nuresh. Kunal, what about you?
I'll go for Canara Bank. I think that's a stock which is showing bullish RSI divergence on the daily charts. So looks very attractive as a setup. Expecting 320 as a near-term target for Canara Bank.
Okay, so those are the top recommendations coming in from technical experts. But on that note, we are slipping into a very short break with the news that the Nifty is close to the highest point of the trading session, 18,310. Whether it's a breakout or not, we'll tell you that when we come back.
Devin Choksi, Adani group of stocks are just flying as if there is no tomorrow.
Sorry, Nikunj.
You missed that question on Adani group of stocks, they are up. How could you miss this? No, I'm saying Adani group of stocks are going up as if there is no tomorrow. Do you think the comeback has been slightly much more than you anticipated?
Well, I don't know. I think market has a normal tendency that whenever I think there are no negatives, I think then it results into positive. And sometimes I think the force is, I think, equally very sharp. I think Adani group of stocks probably have always assumed a higher amount of, I think I would say that beta factor is, I think, always remain high as far as Adani group stocks are concerned. So from that perspective too, I think the technical point of view, if you look at it, I think the push is there in the market. I don't think that any big investors, apart from the FPIs, I think who have been looking at this company from investing, have entered into from the domestic turf. So from that perspective, I think one would like to remain a little bit more watchful on this particular move. Most of the companies fundamentally do well, so I think that's where we remain relatively more confident about. Though the valuations have moderated and corrected, so I think there should be some chance of getting it to the little normal levels than what they used to be. These are our views on the subject currently.
The price levels in January were sky high, and the prices in the month of Feb and March were, they were at rock bottom. Where do you think after this entire chain and turn of events, these stocks will finally settle? And let's talk about the top three names: Adani Enterprise, Ambuja, and Adani Ports.
So I think between Ambuja and Adani Ports, I think they have a fairly good stability and visibility about the revenue generation and the cash generation. So that way, I think these companies, they remain relatively more stronger comparatively into the universe. Also because of the fact that their capex program is funded out of their own businesses, vis-a-vis Adani Enterprise, where probably you require additional amount of capital to put across new infrastructure projects, and that's where probably I think it may continuously keep some amount of equity diluted at some point of time. But the port and the Ambuja Cement particularly, they remain relatively more stronger. Not too sure where exactly I think would put the price at this point of time. because we are still waiting for, I think, the final outcome of whatever the inquiry is pending from SEBI's side. Once that thing is out, probably I think one could remain more confident about putting across the numbers. As I said, fundamentally remains convinced about the current valuation and do hold the belief that I think the current valuation has the possibility to appreciate from current levels by at least 15 to 20%.
In the meantime, let's pull up the stock of Aditya Birla Fashion as well. The numbers just came out, and it doesn't look like a very impressive set. Yes, the top line growth is okay, a 20% plus growth coming in because the number is close to 2,900 crores. But on the bottom line, the company has actually reported a loss to the tune of 195 crores. That compares with a profit last year. That's partly because they have taken, some sort of losses from the joint ventures, etc. as well. So we'll try and get you more details on that. But for now, operationally, it doesn't look like a very impressive set. Devane, in the meantime, you wanted your word about Siemens. Would you be a buyer after the 10% correction today?
Well, I would like to, because I think this correction probably is an opportunity to buy into this company. Remember I think the business portfolio that they are demerging is a portfolio, I think, which is probably, I think, the lower end of the entire universe, in which I think they are probably demerging the portfolio. I have not completely gone into a full rationale of how exactly it will look like eventually without that portfolio as far as Siemens, current Siemens is concerned post-demerger. But I believe that I think given the kind of strength that India is demonstrating on the front of higher amount of capital investments, I would think that companies like Siemens and ABB would eventually have relatively better things to talk about. Maybe some part of the correction in the price was justified because the valuations were quite strong. This correction in the price definitely is good for the investors who have missed out the opportunity.
Aditya Birla Fashion, if I frankly think through it, now look at what's happening in the entire branded garment retail space. Now, by the way, to introduce the company, Aditya Birla Fashion Retail, they are part of Birla Group. They perhaps have the largest array of fashion brands after Reliance in India. But they've been acquiring a lot of growth, from designer brands to ethnic wear brands to now they've acquired TCNS. So I think they're spreading themselves too thin. I know Flipkart has ownership there and they're trying to reduce that, and Samir is trying to rework around it. But the bottom line here is that ABFRL has not really created the wealth what a Trent has done, what a Raymond's has done, what a Siaram Silk Mill has done. Let's look at Raymond's 1 year. Let's look at Trent 1 year. Let's look at Siaram Silk last 1 year. And you will be surprised with the kind of changes, what a comeback it's been in some of the so-called fashion labels in India. Trend is up 40% in last 1 year. They house the brand Westside and Zara in it. Shriram Silk, they own the brand Siaram, second biggest in terms of men's suiting, up 2% in last 1 year, 3%. But you look at Aditya Birla Fashion, ABFRL, it had a lot of promise. It is part of FNO and down 31%. Devin, yeah, you want to make a point?
Nikunj, I guess I think in this business,
No,
as I have
Aisha,
understood.
no, Devin, I mean, we're just discussing the Aisha. My sense is that they're just acquiring themselves too thin.
Yeah.
You've just been acquiring left, right, and center, and you cannot grow by acquiring.
Technically, if you were to make a peer-to-peer comparison, they are more a competitor to Reliance Retail than Trent, I would say. Right?
Yeah, but Reliance has a very different kind of a balance sheet, and they have a very different value system which brings on table, and the retail front end and the back end, the geo platform, and the kind of way they are able to marry the whole machinery. I think is a very different experience. The thing with Aditya Birla Fashion Retail is, they have brands like Louis Phillips in it. They have Pantaloon in it. They have such strong homegrown brands, but they've just spread themselves too thin. And over the years, the learning for me has been that if you're acquiring growth, you'll never be successful. You're only making merchant bankers and brokers rich in this case. Devin Choksi, we had to interrupt you there, but yeah, Aditya Birla Fashion.
Yeah, Nikunj, I think you're spot on. Actually, I think in your observation, before creating the size, if you keep on acquiring more brands and try and see, I think, betting the size, if you keep on acquiring more brands and try and see, I think, better profit margin for yourself. I think at least in the initial period, you are not going to succeed. In fact, I think the biggest success strategy which Reliance has demonstrated in retail is that they created a significant amount of distribution reach first, invested significant amount of money in building that reach, and thereafter they started acquiring the brand. Whereas if you are acquiring a brand first without creating reach, That means I think you're incurring cost on both ends, and that is something which is not going to pay you handsomely, because at least in the near term too, I think your margins are going to be terribly bad. From that perspective, I think I'm not a firm believer of any company who, without creating a distribution reach, I think start acquiring the brand. Look at the likes of Walmart, look at the likes of Costco, look at the likes of even Reliance Retail Homegrown. I guess I think they have first created the size and thereafter they have started acquiring the brands. And that is how I think one should learn from many of the majors who have successfully demonstrated this ability to buy the brand, to better the profit margin by buying those brands, but only after creating the scale, only after creating the size.
I want to put the spotlight on Gland Pharma because that stock has had a habit of disappointing, especially when it comes to its earnings. And let's put up a longer term chart. I remember that stock used to trade at what, 3,800, 4,000 plus levels, and now it's down in 3 digits. It's down almost 50% as far as the last few months it's concerned itself. Let's go across to Shrishti and try and understand as to what's happening with this counter. Shrishti, the stock has been disappointing, one of those wealth eroders really.
Well, yes, absolutely. The stock has been disappointing its shareholders, especially for the past 6 quarters, because just a day after its earnings, we have seen a fall in this particular counter, and this time the fall has really been brutal, where in the past 2 days, the stock is actually down over 32%. Remember that Gland Pharma was one stock which saw bumper listing, 14% gains on the listing day itself, and in just 10 months, the stock was more than doubled. But after touching those all-time high levels, if you see the fall, that has been very brutal, 80% downting coming in over there. Let's talk about the recent earnings, where a sheer disappointment coming in on all the parameters, although the analysts were expecting a weak set of numbers. And the factor was one of their key fungal products, which actually lost its exclusivity rights, and from 440 crores sales being recorded in FY22, that has been come down to 65 crores. So they were actually factoring in those numbers, but despite that, there were many negative surprises into the earnings, wherein they do highlight that one of their key customers has filed for a bankruptcy. So that is one big hit that the Gland Pharma is taking, because that has actually reduced the supply to that customers, which is in a financial discovery difficulty. They have lost certain other customers as well, and they also have had temporary shutdown in some of their production line, which had additional impact of 30 to 40 crores just in Q4. Other than that, the sales of their heparin, that was also low due to the lower pricing, and Gland Pharma is actually not ready to go away with their inventories, which is actually at a higher cost, and they are not ready to sell it at a lower cost and take a hit there. So this is what the analysts are highlighting, and they are also saying that the granular details seems to be very unconvincing right now. The management failed to provide any clear visibility on the stabilization ahead, and those are some of the reasons that we have seen downgrades also coming in post earnings.
Okay, so that's a take coming in on Gland, but what should one do with this stock, Devin? Has been quite a bit of disappointing performance from this one.
Honestly, I think not been keeping a good track of it post listing, so would refrain from putting across any views currently.
Okay, let's move on and let's talk about how HNI, private equity and venture capitalist interest now seems to be spiking in IPL. So where does this increased interest take individual teams and their valuations, something that's always been part of coffee table conversation, and how this renewed interest turned IPL into a decacorn of sorts, with valuations worth about $10.9 billion in just a matter of 15 years. Sharad is here with some interesting data and analysis on the same. Sharad?
Well, yes, be it the HNIs, Ps and the VCs, they are actually trying for the investor pie when it comes to IPL. And of course, the brand numbers are very high. But we look at it, the Tiger Global itself is actually planning to invest almost $40 million. Now, this comes at a valuation for Rajasthan Royals at $650 million. And do remember, there is already a PE investor called US-based Red Capital, which has already invested in Rajasthan Royals. Apart from that, a lot of buzz coming in the unlisted space, and we are talking about Chennai Super Kings. Over here itself, from its 2021 highs, however, there has been a correction in the unlisted space, as we had taken in the ET Now research. Apart from this, do remember that there are key shareholders already there, big investors such as RK Damani, LIC, and even India Cements is having almost 31% stake, along with Captain MS Dhoni having stake in the company. Now, do remember that there is one more interesting stock, which is actually Gujarat Titans. And over here, we look at it, the UK-based CVC Capital. They have actually invested the first time as a P for an IPL team, and of course the bidding numbers coming in is more than 5,000 odd crore rupees. But the journey of IPL, especially in the branding part, that is something to watch out for. And from 2008 to 2023, this journey of 15 years, you look at it, the numbers have been mind-boggling. The valuations has actually increased by 10 times, and it has become decacorn. And decacorn by definition means a startup or a company which is having a valuation of more than $10 billion. Now, be it broadcasting deal, title sponsorship, most of them have risen between 15 to 20 times over this 15-year period.
Okay, now, in case you're wondering that what is LIC got to do with cricket and why LIC has investments in this one?
Everyone loves cricket. I don't know.
No. I mean, I'll tell you why it happened, because they have ownership in India Cements.
Oh, so
And this company got, LIC is not going to be buying an unlisted company. So they actually got for free. India Cement ke share per Chennai Super King free. And
What a deal.
yeah, and that explains why Radhakishan Damani has a very large ownership there. Why? Because Radhakishan Damani has a very large ownership in India Cement.
India Cements.
But at the peak of the COVID crisis, the stock price of CSK at the peak of COVID crisis had come to sub 50 rupees. And it's just been one of those, real unlocking of valuations which can happen in a country like India when anything has got to do with cricket. Devin Choksi, which is a good unlisted stock to buy according to you? And I'm just thinking through it. Is it NSE or is it CSK?
Well, I think NSE would be more predictable and more preference, I think, from my side, because of, I think, the large size of balance sheet that they already created, and also the fact that I think they hold significant amount of cash. Plus, I've seen the exchange business, I think, very, very closely, and I believe that I think in this particular business, the comparatively, I think you have relatively higher amount of, I think, predictability of revenue going forward as well. Because on a current market valuation, if the market capitalization itself, I think, is going to happen 4 times, 5 times from now in a span of around 10, 15 years. In my viewpoint, I guess I think this is the biggest trigger which would probably, I think, work for the exchange and exchange related services that one holds. In India, so far, exchanges have not been able to, I think, sell their other services, that is the information data related services, as much as I think they would sell it at exchanges like NYSE. I guess I think that is another big opportunity that one could possibly argue for going forward. NYSE kind of exchange, I think, would end up generating close to 35 to 40% from the data selling services, which Indian exchanges so far haven't been able to capitalize fully. If that situation happens, then according to me, I think the exchange is sitting on a mines of data, which currently is not fetching them enough amount of revenue and the profit, which could eventually do so. So I believe that I think I have more conviction at this point of time on exchange related businesses per se. IPL, I love it, but I think it's more remaining a seasonal part of the business, whereas I think this business is definitely, I think, more sustainable business hereafter.
ICICI Prudential is looking strong. You got HDFC Life, which has made a comeback, but LIC. Then when LIC was not going public, everyone started complaining, okay, government reforms on a backseat, take LIC public, take LIC public. When the initial pricing was announced, it was like merchant bankers are not leaving anything on the table, but they left a lot on the table. It was almost one-time embedded value. But now it has gone public and it has lost 40% from its issue price. Everyone is saying, why did the government take it public? Because it has been a wealth destruction for everybody. Decide क्यों नहीं होता है? Public, if it was not going public, no reforms. If it is going public, why did you take it public?
Well, I guess I think one of the important points which we are missing out, there is an overhang of supply, and that is what is preventing this stock from getting re-rated on the valuation side. Today you are 5% diluted. Eventually, I think you will be diluting 25%. So continuously, I think for a large size company like LIC, I think dilution is going to be very high. Had it been a situation when there is a private sector who had been a promoter of this particular company, I'm pretty sure that they would have been able to systematically attract the global investors to come into this particular business, which possibly is not happening in case of LIC. And that is the reason for which I think the stock is languishing. In my viewpoint, I think the business of the company remains absolutely convincing and strong. I guess I think they have got a value proposition also on the embedded valuation, as you rightly mentioned. At the same time, I think this particular company has a fairly good reach, and if they are digitalizing their reach and expansion, which we yesterday I think came across from IRDA's announcement, I believe that I think the business holds maximum amount of gain to talk about. Maybe they require to bring some solid good investors in the cap table that could possibly drive the valuations hereafter.
Coming up is because I looked at the numbers of Narayana Hrudayalaya in the morning. And look at the 1 year or 1.5 year. Let's look at 1 year. Actually, it's a good, reasonable amount of time frame for any hospital stock. Narayana Hrudayalaya last 1 year up 31%. Flip it around with a Shalby, similar returns would have gone. Apollo Hospital post COVID has just gone gangbusters. You know, as if it's become a hotel, not a hospital. Look at the stock, 52-week change, 52-week change 24%. Last 2 year change even better. So some of these stocks have got massively re-rated. But Fortis is just stuck there because of that court case. And Fortis, in fact, in last 1 year must have given negative returns if my memory serves me right. In 52-week change 17%, but it was at 340, 350, right?
Yeah, that was the high. Fortis.
It's given a negative return, whereas every other hospital stock has just gone through the roof.
Yeah. So it's consolidating, but then there's no negative patterns on the charts, at least for Fortis. And when most of the other peers in a sector, when they get into a breakout, whether it's Narayana Hrudayalaya, whether it's Apollo Hospital and such other names, I think that could just be a matter of time. But ideally in this kind of a scenario, the only concern is how much can one wait before the breakout happens. So I think in that aspect, I would wait out for 300 to be taken out for Fortis to get into a breakout.
Okay, so that's about Fortis, but you also have to take the BDSC ideas out of the way. Naresh, what's the buy today, sell tomorrow trade?
So first is a buy on LTI Mindtree, which has given good follow-up momentum today. IT pack looks interesting. So stop loss at 49.30 and a target price of 50 and 50. Second is a buy on L&T, which is back to the support area of 2200, expecting a bounce back here. Stop loss at 21.95 and a target price of 22.80.
About you, what are the BDSC trades that you are spotting?
So the first one is a buy on JSW Steel, going for a contra buy over here, targets of 740, stop loss at 688, and HCL Tech is the other stock which I would suggest as a buy. Had given a buy on this stock last week as well, so remains to be a strong buy candidate from current levels. 1150 is the revised target, and stop loss trail to 1090.
Okay, some interesting BTST trades coming in there. Just looking at a couple of other names as well, and Muthoot Finance surely is seeing a very strong earnings reaction. That stock holding out by a good 9%. On the flip side, though, Siemens continues to lose strain. MCX as well came out with its earnings, I think, over the weekend, 3% lower there. There's JK Cement, Alchem Labs, and IEX, which are all losers in trade. Sectorally, Kunal, Naresh both highlighted as to how IT is really sprung up. So even today, TechM is holding up 3.25%. TCS is up 2.25%. Wipro, HCL Technologies, Infosys, they're all holding out very smartly indeed. Devan, I don't know if you've already given your view on IT or not, but wanted to know whether you think the worst is behind. I mean, we've seen a consecutive 4-week of rebound come in for the Nifty IT alone.
Aisha have been, I think, suggesting that I think this particular space, I think, unnecessarily has been questioned by, I think, everybody because the guidance given by Infosys are traveling a little bit or extremely cautious. I would think that I think the global market situation suggests that there is no choice but to keep investing money into technology. And as a result of which, I think they will be only then surviving themselves from against the disruptive forces which are currently operating in the universe. Indian service providers, Indian IT service provider companies are definitely, I think, remaining relatively strong proposition. There may be a question in a couple of quarters wherein US and Europe will not be able to spend as much amount of money. But given the fact that I think they do have to spend this kind of money eventually, I would remain confident about the prospects of IT companies, may not be for 1 or 2 quarters, but I think for many quarters. Having said that, I think some of the niche players in the mid-tier space particularly, they look relatively more comfortable to me. Those who are providing the IT solutions in engineering space, those who are providing the IT solutions in the renewable energy space, and I think the application thereon. So there probably I guess I think the companies like L&T or LTTS or for that matter Science Technology, Tata Elxsi, I think such kind of names I think they remain strong proposition as far as investment outlook is concerned. Infosys, TCS are 15-20% appreciation provider from their lows. So anything giving even anything that is coming down as far as the prices are concerned is definitely I think a buy opportunity for those 15-20% return in your index portfolios.
Okay, so that's the take coming in as far as IT sector is concerned. For now, the market is still around that 18,300 mark. But remember, there are a lot of cues to watch out for today. Top of the list is the fact that tomorrow that 2,000 rupee exchange will start. So that's one important event to track for tomorrow. We'll see whether there are huge queues ahead of that or not outside the banks. But for now, that's an important event that we are tracking separately. The G20 meeting will be underway. There is a part of it happening in JNK, and then there is an investment group meeting also in Bengaluru, so we are watching out for that. Separately, the PMI data, US, UK as well as Eurozone data will be out in terms of earnings. Amara Raja, Biocon, Ashok Leyland, Dixon Technologies, JSW Energy, these are some of the names that will come out with its earnings tomorrow. And of course, Century Textiles, Somani Ceramics, Varroc Engineering and Bajaj Electricals will also be in focus because the board is likely to consider fundraising tomorrow. So we'll watch out for all of these cues which are lined up in the trading session. But before we start winding down on the day, Kunal, your view as far as the index is concerned, very quiet today, 18,300. Do you see it breaking out anytime soon?
Well, I see at least till this Thursday we could continue to trade into this range of 350, 400 points on the index because of the way most of the options data is showcasing the kind of writing of call and put both for individual large cap names. Unless that data changes, hopefully by the end of the day, then we would still revise the view on the upside. The bias still remains on the upside. So even if we are going through a patch of volatility or consolidation, the bias was still positive for the indices, and we were just waiting out for that 18,050 as a retest to initiate or go for a contra buy. So I think we would still trend to this range. The sector churn today, the move from banking stocks towards the IT also reinstates the fact that we are getting into that phase where most of the market internals are getting a lot more better as well as vibrant as compared to what was been 2-3 months back, and that also leads to a lot more bullishness going forward. So the bias remains bullish, but over the very near term, next couple of days, would expect some consolidation.
Right, okay, let's begin winding up.